Hello and welcome back to WealthyTrades.com. This is Tyson Clayton once again in our series, The 4 Steps of a Successful Trade. Over the last 3 videos, I've showed you the steps that you need to take, that every individual trader or investor needs to take to properly structure a trade. And these are the steps you must accomplish before you push the button and decide to buy or sell any asset class, any stock, or any sector. Step number 1 was get a directional bias. If you remember, we get our directional bias based on the Wealthy Trades dashboard. We get that by the market trend quality, which is on the first page of the dashboard. What we want to do is we want to see what direction is the arrow pointing. If it's pointing up, then we know that we probably are going to have a bullish bias, but we take it further. And we want to know the quality of that uptrend. And if the quality is below 50%, indicated right here, then we want to have a neutral bias. And as you remember, there's 3 different biases we can have, which is a bullish bias or a buy-in bias, a bearish bias or to sell, or neutral. So in this case, we want to have a bullish bias because we have an uptrend and the trend quality is above 50%. If it were below 50%, then we would have a neutral bias. But in this case, we are bullish. We then want to put the odds in our favor and go to step number 2, which is exactly that. How do we get the probabilities and the odds in our favor? Well, at WealthyTrades.com, we look at the 9 sectors within the S&P 500, and we rank them every day, week, and month. And in this case, we can see that the XLB, or the materials sector, gives us the highest probability of success for the upcoming period. And we know that based on the quality gauge. All right, this quality gauge, if you remember, is a proprietary calculation based on the number of stocks within that sector moving in the direction of the trend, how many of those stocks are hitting their key levels within that day, and forward-looking, how many, what is the probabilities of those stocks hitting their levels going forward. In the XLB, that represents 63.4% quality, which is a very high, good quality score. Therefore, we have an uptrending market. We need to have a bullish bias because the quality is good. We need to put the odds in our favor, focus on the material sector. Drill down analysis says let's focus on the stocks within the material sector and find the stocks that give us the highest probability of success. We do that by looking and seeing these are the 8 stocks that give us the highest probability of success. I then looked at DD because we have, as I can see, it gives us a 73.1% probability of hitting its upside levels to win. So I'm going to click on that. It pulls up the data box, which gives us a phenomenal amount of information. It shows that the prior close was $76.31. The expected upside for the next day or the next period is $76.86, so about 55 cents higher, and the expected low is 55 cents lower. This is powerful information because we can see that it has a 73.1% probability historically of hitting that upside level of 76.86. So as I mentioned in the last video, in step 3 is pinpointing our entries. Well, just with this information, we can see that buying DD at the open with a target of 76.86 is probably a really good plan because it has a 73.1% probability of rallying 55 cents because it closed at 76.31. And it only has a 25% probability based on history of hitting 75.76. So therefore, having a bullish bias and maybe just buying right at the open is the right thing to do. But we took it further and we said, how do we use the levels to win profit to help pinpoint our entries or maybe actually add to the trade? Or if we're not in the trade right at the open, but it rallies up and it hits these levels, how do we then maybe structure a trade? Well, because we have a levels to win profit when it hits that level historically, any positive number tells me that when it hits this number, it tends to go and continue to go in the direction of the trend. It makes money. So therefore, if it hits this level and I'm not in the trade, I can then structure a long position there and look for this thing to continue to rally and be a profitable trade. We also said there's another pinpoint entry on the downside where if I'm not in the trade and say it sells off right at the open or during the day and it hits 75.76. Well, I can be confident to buy there also because historically when it hits that level in an uptrend on the upcoming day, it makes money. And it normally bounces off that level, and it made $1.56 historically over the last 52 periods. So step number 1, I had a bias. I need to be a buyer. Step number 2, I needed to put the odds in my favor. We did that by finding the best sector within our bias, which was up, which was the material sector. We then drilled down and put the odds in our favor even more by finding the best stock within the best sector. That was DD. We pinpoint our entries by using the levels to win, HPP, levels on levels, and levels to win profit, by understanding how we can pinpoint our entries and find profitable trades. That's very powerful information. That leads me to step number 4. To finalize and wrap all this up, we need to manage risk. And this is the last, but probably, I've said this maybe with every single step, the most important step. But you have to manage risk. And I use these levels and the probabilities and the profits of those levels to help me manage risk. What I don't want to do is I don't want to get into the trade and target 76.86. All of a sudden the market falls. Let's say I bought at the open. Let's say I got it at 76.31. Let's say it opens up at the same price and it starts to fall. And now it's trading at 75.76. Well, if I know that historically that level has a tendency to bounce off and actually close profitable, close higher than that level, then that's going to help me manage my risk, because what I can do is I can structure a trade where I can take a portion of my risk that I'm willing to allocate to this trade each day and buy at the open, buy, let's say, at 76.31, and then I can take half of my position and buy at 75.76. I don't need to take my entire position and buy at the open at that price. I can use these levels to say there's 3 potential entries in this trade. 1 is buy right at the open, 2 is buy at the upside breakout level, and 3 is buy 75.76. So if I have a structured amount of money or amount of shares that I'm willing to buy, then I can structure those in, I can buy a third at the open, a third down here, and a third up here. The other way that I can use this information is I can use the levels on levels profit. And if I'm a probability trader, if I want to put the odds in my favor as much as possible, then I can use the levels on levels profitability. What I mean by that is the levels on levels tells me the probabilities of it closing above this level or below this level. So if I'm trading in this and I'm long and it rallies up and it hits $76.86, then I can look at this levels on levels probability and see that it only historically has a 30.8% probability of closing above that level. So therefore, if I'm a probability trader, even though it makes money, if I'm a probability trader, I can use this information, the fact that it doesn't close above that level at a very high rate, to help manage my trade and get out of a portion of my trade. So at that level, I can lock in profits and say, I'm going to keep half the trade on because, yes, it typically is profitable at this level. But I'm a probability trader and I want to at least lock in some of my returns. And I use the levels on levels probability, the probability of it closing above this level, to help me manage my risk. I use all this information, the levels, the historical hit rates, and the profit to help pinpoint my entry and to do step number 4, which is manage my risk. That is the most powerful thing you can do, and those are the 4 steps to a successful trade. Step number 1, get a directional bias. Step number 2, put the odds in your favor. Step number 3, pinpoint your entries. And step number 4, manage your risk. I don't care what strategy or system or concept you use to trade or invest. You need to follow those 4 steps. And if you do, your chance of success within trading and investing substantially increase. With the Wealthy Trade strategies and system, you can systematically, every day, week, and month, get a directional bias very quick. You can put the odds in your favor with the best sector and the best stocks in that sector. You can pinpoint your entries based on the levels to win, the HPP, levels on levels, and the profits. And then you can manage your risk based on those same numbers. It's the most powerful suite of trading and investing tools ever created in a very simple and straightforward way. I thank you for listening, and I look forward to helping you in the future.